The Federal Reserve signaled late last week that it will likely cut its benchmark interest rate in September, which has already helped push mortgage rates lower, Freddie Mac says. Hi, I'm Shemeika Fox, your Santa Cruz real estate expert and your personalized real estate concierge. Let's take a look at the current interest rates and see what is predicted for the near future. The 30-year fixed rate mortgage averaged 6.35% this week, and some economists believe rates will continue to fall further over the upcoming weeks. Late last week, Federal Reserve Chair Jerome Powell said the time has come for policy to adjust and said an interest rate is likely at the Fed's next mid-September meeting. Mortgage rates fell again this week due to expectations of a Fed rate cut, says Sam Cater, Freddie Mac's chief economist. Rates are expected to continue their decline, and while potential home buyers are watching closely, a rebound in purchase activity remains elusive until we see further declines. Mortgage rates are significantly lower than what they were a year ago when they averaged 7.18%. That could translate into hundreds of dollars in savings on borrowed costs compared to a year ago. At the 6.35% average rate this week, a monthly mortgage payment on a home priced at $400,000 would be $1,991, assuming there's a 20% down payment. This is the lowest mortgage interest rate have dropped in the past 15 months. Lautz says this changes housing affordability for home buyers. For buyers who sought a mortgage at the recent high of 7.79 in October 23, the payment would be $2,301 at 6.35. This is a payment difference of $301 a month or $3,720 a year. Still, some home buyers are shrugging off the latest drops and holding out for even lower rates. After all, despite the recent dip in rates over recent weeks, mortgage applications for home purchases only eked up at 1% gain, remain 9% lower than a year ago, the Mortgage Bankers Association reports. Prospective home buyers are staying patient now that rates are moving lower, and for sale inventory has started to increase, says Joel Ken, MBA's deputy chief economist. Mortgage rates this week, Freddie Mac reports the following national averages with mortgage rates for the week ending in August 29th. The 30-year fixed rate mortgage averaged 6.35%, dropping from last week's 6.46%. A year ago, the 30-year fixed was at 7.18%. 15-year rates are at 5.51, falling from last week's 5.62, and last year they were 6.55%. So how do these interest rates and predictions affect the actual housing market? Well, contract signings dropped to the lowest level on record last month, but pent-up buyer demand could be waiting for opportunities to open up. Contract signings fell last month to the lowest level on record as the housing market continued trudging through a sluggish summer. The National Association of Realtors' newly released pending home sales index, a forward-looking indicator of home sales, based on contract signings, dropped 5.5% in July and was down 8.5% compared to a year earlier. A sales recovery did not occur in midsummer, says Lawrence Young, National Association of Realtors chief economist. The positive impact of job growth and higher inventory could not overcome affordability challenges and some degree of wait and see related to the upcoming U.S. presidential election. Some prospective home buyers also may be waiting for mortgage rates to drop. Federal Reserve Chair Jerome Powell announced late last week that the time has come for policy to adjust, a signal to the market that an interest rate cut is likely